Hello, and welcome to this webinar presented by the IFRS Foundation. I'm Marty McBrien, Chief of Strategic Affairs and Capacity Building at the IFRS Foundation, and I'm your host for today's webinar. First, we'll get started with some housekeeping. We encourage you to put your questions in the Q&A on today's topic of industry-based standards. We will not get to all of them today, but rest assured, outside the scope of today's rest assured, we will get to them and consider them in all of our work, our educational work, our future webinars, and our communications going forward. So please do continue to pop them in throughout today's presentations. This webinar is being recorded and will be made available on the IFRS Knowledge Hub. We have closed captioning enabled. You can turn it on live in Zoom. Live closed captioning isn't 100% accurate, but we trust it will help with the accessibility of today's webinar. Another quick disclaimer before we get started. The information on the topics discussed during the webinar does not constitute implementation guidance from the IFRS Foundation. So a warm welcome to everyone joining live from around the world today, and as well as to those that are listening to us on demand. Here's a look at our registration. We have over 3,600 people from 123 countries joining us today, spanning consultants, sustainability officers, and finance and reporting professionals, as well as accountancy professionals and academia. Fabulous bunch. Our topic for today's webinar is the value of industry-based disclosures. We'll discuss why ISSB standards require industry-based disclosures and how they support industry-based disclosure, focusing on the SASB standards and industry-based guidance. To help preparers get started with this approach, we'll give you an overview of the SASB standards, including how they're structured by industry, topic, and metrics. We'll also talk about the work that the ISSB is undertaking now to ensure the SASB standards stay current, and how industry-based approaches can inform our research projects on human capital and nature. Our hope is that you will come out of this webinar better equipped to get started on reporting with the ISSB standards. Rest assured that all the links to the resources that our panelists talk about today will be added to the chat as we go along and sent to you in a follow-up email. We'll also share a copy of the slides. Now, so who is going to be our speakers today? To lead off the discussion in a moment, I'm going to welcome Verity Chega, ISSB board member, who is also on the SASB Standards board and is well placed to be speaking today. She comes from background across the investment world with CalSTRS and BlackRock, and I'm sure many of you know her already. She doesn't need an introduction. I'll then welcome in our guest speakers who will bring expertise from many different perspectives, including investors, the accounting profession, and companies. And I'm delighted today that I'm joined by Jessica Ground, the Global Head of ESG from Capital Group, Katharina O'Brien, Head of Sustainability Reporting and Policy in the EU and International for Amazon, and Mark Vasson, KPMG's Global Head of Corporate and Sustainability Reporting. So without further ado, that's enough from me. Verity, please start us off with an overview of the benefits of the industry-based disclosures for companies and investors and a brief introduction to the SASB standards. Over to you.
Thank you, Marty. And thank you to all our panelists for joining us today for this important discussion. I want to start by saying just very plainly that both of our standards, both of the ISSB standards, IFRS S1 and S2, require industry-specific information because we heard repeatedly from investors and companies that sustainability-related risks and opportunities vary from one industry to the next. Investors analyze companies and portfolios by industry and sector. And industry-based disclosure standards capture the sustainability-related information that is most likely to be relevant to companies' financial performance within each industry, and therefore is most likely to be relevant to investors. For example, ecological impacts on marine resources could have biodiversity impacts that differ for companies in the hotels and metals and mining industries. But the way companies in those industries manage the risks or opportunities associated with biodiversity differ because they affect financial performance in different ways. Among other advantages, industry-based disclosures can increase the efficiency for report preparers, reduce costs, and minimize noise for investors by focusing on the most relevant information while providing the comparable information necessary to assess a company's prospects. The SASB standards were brought under the IFRS Foundation's roof and are a critical component of the ISSB standards, largely due to their industry basis. So what are the SASB standards? They are a set of 77 industry-specific standalone disclosure standards. They serve as a guide to identify the sustainability factors most relevant to financial performance and company prospects for the typical company in a given industry. They were developed by the SASB through transparent, market-informed due process. And now, today, more than 3,700 companies from more than 80 jurisdictions around the world report using SASB standards. That represents more than 75% of companies in the S&P Global 1200 Index that are now SASB standards reporters. You might be wondering, what are the industries covered by SASB? SASB developed, and now the ISSB maintains, the Sustainable Industry Classification System, or SIX for short. SIX groups companies into industries based on shared sustainability-related risks and opportunities, rather than by economic cycles or revenue streams. Together, SIX comprises 11 sectors and 77 industries. And the ISSB has discussed this system and agreed that SIX is the best way to facilitate investors' ability to analyze and compare companies. To learn more about how to use the industry-specific SASB standards to meet the requirements in IFRS S1, please refer to our educational material available on our website. Back to you, Marty.
Thanks, Verity. Crystal clear on what the standards are. So let's now hear from our panelists covering the three main components of reporting, the reporting equation. We've got companies, we've got investors, and we've got the auditor. But just before I hand over to our first panelist, can I remind the audience, please do pop your questions in the chat. We'll take them after this first round of comments from the panelists. So the functions at the bottom, pop them all in and we'll get them covered off. So I'm going to start with Jessica Ground, Global Head of ESG at Capital Group, who can provide us with a perspective on how important industry-based disclosures can be for investors. She has more than 26 years of industry experience and has been with Capital Group for the last 3, and is also a member of our ISSB Investor Advisory Group. So Jessica, how does an industry-based approach to sustainability disclosures serve the needs of investors? Over to you.
Thank you so much for that background. And I think one of the key things that I really want to go back to is, why are we integrating ESG in the first place, and why are we looking at this? Well, at Capital Group, we're an active fund manager investing in listed equities and fixed income securities. And we're really doing this to support superior investment results. We believe that ESG issues, and particularly the change that is creating them and how companies are navigating them, is a really good indicator of where the long-term industry winners and losers are going to be. And so just like any financial information, we want incredibly robust information around ESG issues. And one of the reasons why we support SASB in so many different ways is because we think that they're a key organization helping us get this robust information. Investors have a bit of a reputation for loving information, always wanting more and more. But one of the things I really want to stress is unhelpful or too much information is really not fantastic. It just becomes noise. And the cost for us as investors is pretty high. And also we acknowledge the cost of companies or issuers reporting this information is pretty high. So we want material information that really supports much better decision making. And I couldn't agree more with what Verity said. The issues that are material for each company, each sector, each industry are very different. And the fact that SASB did so much work on identifying what are the different material issues at that industry basis has been so incredibly important for us as investors, and also we believe for the wider ecosystem. there. So I think just worth spending a little bit more time on how the SASB results were formulated, because I think SASB frameworks were formulated, because I think many of you have been overwhelmed by different frameworks and different standards that have perhaps come into this space over the market in the market recently. And I just think that we feel that SASB is so different because of the leading role that investors really played in doing this. So SASB really started with a huge amount of evidence-based research into what could possibly be relevant and what could be material. And then they really engaged a wide range of stakeholders, but the investor voice on that, as well as the voice of companies and subject matter experts, was incredibly robust. And I think we really feel that SASB has done a fantastic job of convening people and listening, particularly to the voices of investors. But that didn't mean it happened in a dark room. All of the standards were available for public consultation, and then there's the oversight that SASB has provided, and then the continual oversight that they will provide. And that's incredibly important in our experience. ESG issues, unsurprisingly, because they tend to look about forward-looking risks, are always evolving. So it's not really going to be a surprise when I tell you that when we started building our own sector-specific ESG tools, we started with SASB as a really strong foundational starting point. The other thing I really want to touch on is we as long-term investors really value the relationships that we have with companies, and companies are continually coming to us and asking where they should start on sustainability reporting, or they're sort of coming to us because they're facing new requirements. And the fantastic thing about the SASB industry standards is that they support the implementation of S1 and S2. Because we've been so closely involved in them, we really feel that we can speak to them very meaningfully of how relevant they are for investors. But finally, and really importantly, they really support global comparability. This is incredibly important for us as a global investor. But the global baseline, but also the ability to compare companies using that same baseline, is incredibly helpful. I go back to my earlier comments about how do we really turn noise into information, and having comparable baseline standards is an incredibly important part of that. And it's really one of the reasons why we've been encouraging policymakers around the world to look at SASB, and as they adopted the IFRS S1 and S2 standards to really reinforce how useful this package of measures are, and the importance of wholesale adoption of these. So an incredibly important tool that's designed very much by investors for investors, but ultimately we think there are huge benefits for companies themselves and the wider marketplace as we all seek to integrate ESG more effectively, and most importantly, really with the aim of generating superior investment returns over the long term for our clients.
Thank you so much, Jessica. Absolutely crystal clear. I'm now going to move across to Mark Vasson, our senior partner with KPMG, responsible for corporate and sustainability reporting. Now, I should mention, like Verity, Mark was on the SASB Standards Board. He's also a member of the Integrated Reporting and Connectivity Council, and an advisory works on advisory capacity to both the ISSB and IASB. That board does it, sort of came together with the consolidation to help bring together some more governance for the new standards boards and move in integrated reporting for those that don't know about that, and also is president of the Accountancy Europe. So Mark, and also I guess the list could go on, you're also hugely helpful for our capacity building work at the foundation, and I'm sure everyone else knows you through some other fabulous contribution you're making to this ecosystem as well. It would be great if you could talk a bit about disclosure quality, what you're seeing in terms of completeness, comparability, verifiability, and how industry-based disclosures can help achieve some of that. Over to you.
Yeah, well, thank you, Mark. Thank you for having me on this webinar. Really great to be here. And yeah, you said already, I'm a former SASB Standards Board member, and of course, therefore, I feel strong about industry standards. Now, people who know me know that my background actually is in financial reporting, where industry-specific sectors are really less common. And So I had to learn a lot when I got onto SASB, but during my time on the SASB board and also subsequently working with organizations now in various industries, for me, it's absolutely clear that every sector has its own sustainability risks and opportunities, even if there are also some cross-sector topics such as climate, but there are very specific industry issues and we need to deal with these. So before going into your question on comparability and completeness, maybe a few comments first on, I think, the changing landscape, right, where we're coming from and where we're going. I think we're moving from a plethora of different standards that were used on a voluntary basis and with voluntary assurance to a much more regulated environment of, in many cases, mandatory standards and also mandatory assurance. And as we move into that environment, there's even a stronger focus on disclosure quality. Need for, yeah, you said it, Marty, greater comparability, completeness, and also quality of data. So let me then allude on how I think that the industry standards are going to help. First, with comparability. I think if you talk about comparability, there's always this trade-off with relevance, right? You could have 100% comparability, but that may impair the relevance. If you would leave everything totally free, it could be, you know, very relevant for the individual company, but not comparable. So you need to find the right balance. And I think sector standards really help that comparability, but not at the expense of relevance. The model in S1 and S2, which drives for comparability through a common framework, is underpinned by the relevance that comes from the sector-specific disclosures based on SASB. So determining your material sustainability risks and opportunities, you have to have a look at the standard and decide, as Verity already said, which are the sustainability factors that are material to you. Given the diversity of business models, even within a sector, full comparability will always be a challenge, but I think that using the sector standards will really give a relevant starting point to identify comparable disclosures. When I talk about comparability, I think it's also important to consider other frameworks, and Jessica mentioned the global baseline. We do want a global baseline also as auditors, and that includes sector standards. We know that in Europe, EFRAG is also developing sector standards as a GRI, and I think it's absolutely vital that the ISSB works with both to drive comparability globally and avoid unnecessary reconciliation or dual reporting. I think the ISB is in a very good position of having the SASB standards. I think you're the only one who doesn't need to start from scratch because we already have the industry standards. And we would hope that EFRAG also uses these as a basis, because it is important that we, as I say, you know, have to have that comparability also across the different frameworks. Same applies also to GRI. I think the recent agreement that you have made with GRI is a great opportunity to demonstrate that over the coming months, you know, that we can streamline this. Now, let me go back to another element of quality, and that's then completeness. I think it will always be a judgment to understand what is most important for a company, and therefore what a complete set of disclosures includes. That's also why principle-based standards like S1 and S2 are so important. I think that sector standards are vital to supplement this, though, as they indicate to companies what is likely to be relevant to disclose given their business model and activities. And from an auditor's perspective, I think there is an expectation also on our profession to be very keen looking at avoiding greenwashing. And I think the key tool to prevent greenwashing can also come through the completeness of disclosures. So these industry standards help avoid situations where the company only reports on or has assurance on topics where they have good performance and only want to share success. I think it gives you that completeness sense. And of course, it will always be important to consider the facts and circumstances of the reporting company, but sector standards are critical input in deciding what information may be important to users and investors. Now, finally, in verifiability, the more specific standards are also with respect to measurement, the better it is from an assurance perspective, even within the context of principle-based standards. And I think the existing SASB standards do not only provide the most likely material topics for users, but also metrics and technical guidance to support measurement. And this, I think, is also very helpful from a verifiability standpoint. So ultimately, you know, whether information can be assured depends on whether it is prepared with sufficient quality or not. And assurance can be best support companies when they have high quality relevant standards to follow. And sector standards are really an important tool to drive comparability and completeness. So let me leave it at that for now, and happy to answer any further questions later, Marty.
Thanks, Mark, and I'm sure we'll be coming back to you shortly. So let me turn now to our preparer representative, Katharina Bryan, who's Head of Sustainability Reporting and Policy, EU and International. No small task. Some preparers, Katharina, may look at the industry layer of requirements, the ISSB standards, and see them as an added burden. But do they instead help preparers like yourselves, narrowing your focus and making disclosure more efficient? Do they help with internal benefits, such as being able to measure and benchmark performance, like we've heard from the other speakers, according to our industry-specific metrics and the standards? So, Katharina, I look forward to your thoughts.
Thanks very much. Now, I'll start by coming back, like Jessica, on why we are doing this. Now, at Amazon, we believe that consistent sustainability reporting can act as a catalyst for positive change, supporting the transition to a sustainable economy. And in order for reporting to reach its full potential and drive change globally, it needs to be practical, comparable across jurisdictions, and guide decision-making. And that's where industry-based disclosures come into play. Now, I get the sense that at the moment, many of my colleagues are overwhelmed by what we have to prepare for and what's coming down the line. And I'm faced with questions like, so are SASB still relevant if we have IFRS S1 and S2? Yes, and yeah, but what are industry-based guidance? And I think it comes down to the fact that we haven't got rid of the ESG alphabet soup yet. So I really think that this webinar is extremely timely, and thanks very much to the ISSB and IFRS Foundation for organizing it. So from a preparer's perspective, industry-based reporting approaches based on IFRS and SASB can help to narrow down reporting to what is decision useful and practical. As we have heard, it provides for comparability, both from an investor's perspective, but also for your own management to do some benchmarking with others. So from a preparer's perspective, it's really like drilling down what is material, what should be measured, what should be managed and disclosed. Now, imagine you're a vegetarian. And as you know, as a vegetarian, you're going tonight to a restaurant, and great restaurant, you get given a 10-page menu, which, the vegetables are all mixed up with, the beef, the pork, and the poultry. Well, that's really difficult to go through. Now, what you actually want is a vegetarian section, and that's the SASB and industry-based guidance. It makes your life much simpler because, well, everything you need and what could be relevant to you is already there. That doesn't mean that anyone forces you to eat all the dishes under the vegetarian section or to choose a specific one or two or three. Now, it's about the relevance, what's material to you, how hungry are you? So SASB and industry-based disclosure in general, I think really helps you to have a simpler menu to go through disclosures, what could be relevant to you. Now, and that's nothing new, it's a tried and tested approach. And we have been preparing in our voluntary reporting, we've been using SASB, as you can imagine, for example, for the e-commerce SASB or air freight, logistic, to name just a couple. Now, for companies which are in multiple industries, industry-based disclosures can have a specific challenge because, well, you actually have to look at several multiple, perhaps overlapping industry-based disclosures, and that might create more confusion and a longer disclosures. And as we've heard, if everything's important, nothing's important. But actually, the approach from under the IFRS gives us that flexibility to determine what's material for us. So again, you as a vegetarian are not forced to eat fish. Going forward, I think what's critical for the companies is that and especially for those who prepare in multiple jurisdictions, as is the interoperability between different reporting regimes, and that includes industry-based guidance and guidelines. As Mark mentioned, we know that the EU is developing their own sectoral standards, and we also know that ISSB, and you'll talk perhaps more about that, is thinking of how to enhance certain SASB standards. And from a company perspective, it's going to be really important that the EU and standard setters and ISSB work together on those sector-specific disclosures to ensure the interoperability and alignment as far as possible, given the different materiality definitions. But I think at the moment, it's really, we should aim for more simplicity. Let's not add anything else. Let's make sure that we have a simple menu, and that, we all recognize we are all on a journey. Yeah, happy to discuss more.
Oh, I absolutely love a menu analogy, particularly at this time of day in the UK. So thank you so much, Katharina. You've really set us off now for a very good Q&A session. What I'm going to do first is maybe come to you, Verity. We've had quite a few questions in coming through in the chat, so thank you, everyone. Please keep them coming. But the first one for you is more of a clarification question, if I may, around the standards. So is it mandatory, Verity, to apply IFRS plus SASB in our sustainability disclosures right now? And what does that mean for GRI and TCFD and SASB? Does that mean it's all out of date? Do we need to do these? If you could just provide a bit more color there to help our participants.
Absolutely. So IFRS S1 requires a company to refer to and consider the SASB standards when identifying the sustainability-related risks and opportunities that it should disclose in compliance with S1. And then S1 also further requires companies to refer to and consider the SASB standards when identifying which pieces of information or metrics that a company should disclose to describe its further details about those sustainability-related risks and opportunities or topics that it has determined are relevant to disclose because they're related to the company's financial prospects and would result in material information for investors. This is really deeply described in our educational material that I referred to earlier about how to use the SASB standards to meet the requirements in S1. To put one final point on it, Marty, refer to and consider means look at, consider if they're useful, but not mandatory to disclose. So as Katharina described in her menu analogy, you should look at the green beans, but you don't necessarily need to eat the green beans at that meal.
Thanks, Verity, and thanks for continuing on that theme. Just one more quick one for you before I pass one across to another panelist. Is the public sector considered in the industry-based disclosures?
So SASB standards, like the IFRS sustainability disclosure standards, are designed for for-profit entities to disclose information to their what we call primary users of general purpose financial reports. Those are investors like Capital Group, lenders and underwriters, and other providers of capital across capital markets. So really designed for entities that need this external capital to fund operations.
Thanks for clarifying that, Verity. Now, Jessica, may I come to you next with another question sort of around the value of adopting SASB standards? The question is, so what is the value of adopting SASB standards when we already have the CSRD, GRI, CDP, et cetera, et cetera? Could you, from the investor perspective, give us some of your thoughts, please?
That's such a great question. So first of all, as I really want to reiterate my point is, just as Mark said, reporting accounts and that financial information is there to help investors make better decisions. Those SASB standards, as they've been written by investors, are there to help your investor base. So really well targeted for one user base. Certainly with CSRD, as a number of people have mentioned, we haven't got all of the sector specific guidance that people hoped that we might have during from EFRAG. So we definitely find that SASB can be a really helpful starting point as people work through the EU CSRD requirements and think about financial materiality, and also think about double materiality. You know, and then finally something like GRI is written for a much bigger base than just investors. And we speak to a number of companies who, when they're starting down their ESG reporting journey, do just want to think about that core constituency of shareholders. So I think in a nutshell, you know, starting with disclosures that help your investors is a great, fantastic first place to start, because this reporting and gathering the information, the data, is not always easy. And so starting with that clear kind of constituency as mind is incredibly important. As we're starting to see other regulatory requirements come into play in some jurisdictions, we found that SASB is incredibly helpful, particularly when perhaps all of those requirements aren't quite as well defined as every preparer wants things really, really well defined. And I in our experience, SASB can help with the definition as people start those journeys. So there's a lot out there right now, and that's part of the challenge, as we've said, looking at the long menu, and certainly SASB can be a really helpful tool to navigate everything that's out there.
Thanks, Jessica. That was a very clear explanation of the why. Now, Mark, can I come to you next? And is it wrong to see the is it wrong to see the SASB standards as they currently stand as US standards? Do you feel that the SASB standards are following last year's enhancement work that the ISSB did, are applicable globally, including in the European Union?
Yeah, well, again, that is a very good question. I think the SASB standards have international applicability, right? Yes, they were developed mainly at the time from a US base, but I was on the board. There were other Europeans on the board of SASB as well, and I can just say, well, it's not only the US, it's the Americas use it, but also there's a huge use in Japan. There's also actually significant use in Europe of these standards currently. And I think investors, wherever they are, right, actually have similar views on what is relevant from an industry's perspective. So I think they are absolutely also applicable in the European context. The issues, are global and not just US. Certainly, there was a need for an internationalization project because some of the metrics that SASB referred to were too heavily US based. But I think that has been addressed by actually internationalize them and go more to the principle of what a metric wanted to achieve rather than the specific US metric. But otherwise, I would say, yes, absolutely also applicable in the European context.
Thanks, Mark. Now, Katharina, how would you reconcile the investor-led perspective with the ISSB standards versus the broader stakeholder perspective in the SRS and the GRI standards? And also, from your seat, you have to report against the EU, the Australia, the US, the UK. You're reporting against all of these. Do you have any thoughts on the evolution of voluntary disclosures, potentially even in the US, as part of your remarks? Thank you.
Now, that's a big question. I think that sort of, captures my whole sort of work and our whole work. So I start by saying, well, we have used and will, continue to use SASB in the voluntary reporting. And what we are now doing is, of course, ramping up for reporting under ESRS, so CSRD in the EU, but also in the other jurisdictions where we see which are introducing ISSB. Now, it is of course a challenge, and we'll sort of closely looking at, well, what overlaps are there already between ESRS and SASB. Now, as I've said before, the development of the sector-based guidance or standards in the EU are a course, where we really need to follow them closely. And then I would say that I think what's important for us is, outside of the EU and the US specific developments are actually all the developments so in the international field. So the many jurisdictions which are now adopting or considering adopting ISSB, IFRS S1 and S2. So here we really need alignment to make the reporting easier. And that also goes, for industry-based disclosures. And I would just encourage all the companies which, are listening to say, okay, well, are we monitoring that? And not everyone has the resources. So perhaps ask, what are your trades doing, trade associations doing in these very jurisdictions, just to get a handle and then, be engaged and active.
Thanks, Katharina. That is very good advice for everyone listening in today, is do engage with your trade bodies, do engage with the process as we're consulting on these standards, both in your jurisdictions and the work we do here at the Foundation as well. So I've got one lucky last question for Verity before we start to wrap up today. So these SASB standards are currently being reviewed, Verity. What changes do we expect and when will they be published?
Yep, that's right. We have begun, or the ISSB decided in July 2024, so just 2 months ago, to begin a project to enhance the SASB standards. And this means that we want to work to make sure that the SASB standards continue to be market relevant, applicable to specific industries, and ultimately useful for investors. And so they need to be refreshed as markets evolve and methodologies and practices evolve. So too need to evolve the standards. And so we agreed to start with 12 industries to begin with, 8 in the extractives and minerals processing industry, electric utilities, as well as some food and beverage industries that Katharina will be happy to hear about, including meat, poultry, and dairy, as well as processed foods. So starting with a small cohort of industries means that we can be targeted, we can work with companies that have activities in those particular industries while we maintain and put a hold on the others at one time. All of this will be subject to public consultation, so the market can expect to have full documentation from us, including our plans, including our proposals before we make any final changes to the SASB updates. And at that point, we'll be inviting stakeholders from around the world in every industry, or the relevant industries especially, to review our proposals and give us feedback about if they help make the standards better. That is our absolute target, is to make the standards as useful as possible to as most companies around the world as possible, and ultimately for investors globally.
Thanks, Verity, and thank you to all for all of the questions you've submitted today. There are an awful lot to go through, and we don't have any more time to answer them today. You can always connect with us via our email address, capacitybuilding@ifrs.org. And we will, as I said earlier, endeavour to build all of your questions and your queries into our educational resources, communications, and future webinars that we're producing for you on the topic. So send in your suggestions. So Verity, we've heard a lot from the panelists today. We've had a lot of questions coming in from the floor. What are your parting messages from the ISSB to preparers and other stakeholders before we sign off?
Well, I did, Marty, if I may, I wanted to share a few more words on the specifics of the work we're doing now to continue to enhance the SASB standards. So, as mentioned, the SASB standards are designed and they're built in to S1 and S2 because they support companies in applying S1 and S2. Therefore, we want to make sure that the SASB standards continue to be current and applicable to companies around the world. We also know that doing work on SASB standards right now, while we're also doing work on 2 additional research projects, will be complementary. Our 2 research projects right now are on human capital and biodiversity ecosystems and ecosystem services. SASB enhancements can support the work on these research projects. For example, many of the SASB standards today already include biodiversity-related disclosure topics and associated metrics, covering, for example, water, wastewater management, ecological impacts, materials sourcing, product design, and life cycle management. The SASB standards also include many human capital related metrics, such as employee health and safety, employee engagement, diversity, and labor practices, among others. Disclosures in accordance with these SASB topics and metrics could be relevant to inform the ISSB's research projects, and research on sustainability-related risks and opportunities related to what we call Bs and human capital could conversely inform enhancements to the SASB standards. We know industry-based information is important, and we know it reduces efforts and costs for companies. While we plan to keep SASB standards up to date to meet these market needs, companies should not delay in using the SASB standards. First, because a company applying S1 is required to refer to and consider the existing SASB standards to identify sustainability-related risks and opportunities, as well as those associated disclosures or metrics. And second, because we know investors today want industry-based disclosures and in comparable formats. The ISSB decided to enhance the SASB standards in phases, as I mentioned, with the initial set of 12 SASB standards, and will continue to consider targeted amendments to other SASB standards to maintain consistent measurement of common topics across industries. This is a little bit of sort of cleanup work that we can do behind the scenes to make sure that when we use a word one way in one standard, it's used the same way in another standard. Any changes will be subject to public consultation, which we expect to begin in the first half of 2025. And as we embark on our work plan, including supporting implementation of S1 and S2, research on human capital and Bs, and enhancing the SASB standards, jurisdictions around the world are consulting on adoption of S1 and S2. We would like to remind listeners how important it is to get involved in jurisdictional consultations to support decisions being made about sustainability reporting to help deliver the global baseline of sustainability information for capital markets. And finally, as companies out there listening to this webinar begin to apply S1 and S2, we know there will be application questions, and we invite you to submit these to our transition implementation group, and there should be a link in the chat right now.
Thank you, Verity. And the message there is very much get involved, start looking at the consultations. There's many different links in the chat for you today to download, have a read of, and get in touch if you've got implementation questions. So thank you to Verity for the ISSB for leading the charge on behalf of the board today, and our panelists for your insight, as well as the team behind the scenes that have pulled today together here at the Foundation. And thank you to you all for participating with such wonderful questions. Before we go, we'd just like to remind you all about some key resources to help you stay ahead. The IFRS Foundation offers several programs to help you do this, such as working with our partners, the United Nations Sustainable Stock Exchange Training Program. So you can register for that training in your jurisdiction or for one of our global sessions for free. That's about 3.5-hour online training course. We have a knowledge hub, which has now over 180 curated resources from the IFRS and third parties to help get you started. We have the IFRS Sustainability Alliance, a membership program which provides education tools and peer networking. We have our Fundamentals of Sustainability Accounting credential, or the FSA, which instills the link between sustainability and financial performance. And finally, on our website, ifrs.org, where you can sign up for alerts. And this is how I stay up to date too. It's a great resource. So I would 100% recommend signing up for those ifrs.org alerts. Please remember that your use of our resources and participation in our programs also supports our mission as a not-for-profit standard setter. And do stay involved with all our work here at the Foundation, including through this webinar series. And follow us on LinkedIn and as I said, the news updates to learn about all the variety of topics that we are covering here at the Foundation. Coming up, we have implementation of the standards in Africa, as well as the transition from ISSB standards to the TCFD recommendations for those that are working through that at the moment. You can also listen to our ISSB monthly podcast to stay up to date, and I couldn't recommend them more. That's, again, how I do it too. I'm Marty McBrien with the IFRS Foundation, and on behalf of the team here, thank you for participating, and until next time, goodbye.